Well, of course, it's tempting to increase your risk in the portfolio and buy the rally in such an environment as we're experiencing right now. But we don't want to jump the gun at this stage because we think that there are a couple of questions that the market needs answers to. And the first one of those is, of course, the global economy, which is actually trending down, and the momentum is very weak at the moment. We have to see at least some kind of stabilization before we can sort of get more optimistic about the economic outlook. The second one is the earnings side. Earnings estimates are being revised heavily down at the moment. And if that pace continues, we can't sort of exclude an earnings recession later this year. And in such a scenario, global equities will have a very, very hard time rallying further. So at the moment, as I said, we don't want to jump the gun, but we stick to our neutral allocation in global equities. The short answer to that question is, unfortunately, no. We are neutral across the board within the regions at this stage. It's very hard to see sort of a relative winner or, for that matter, a loser in the regional game. We have earnings estimates on the way down in almost all regions, and they are converging around the same point. Also, valuation-wise, we can't pick any relative winners or losers in the current environment. So, for the time being, the boring recommendation would have to be a neutral across the regions. Yes, it is some kind of a paradox that core rates have actually fallen during this risk rally, which means that core bonds or government bonds have less value today than they had a couple of months ago. We have been overweight in our strategy in core bonds for a couple of months, and we now lower that into neutral because we see less value in that segment. Another bond segment that has done very well during 2019 is high yield, where we have been underweight. And we still see some gains in that segment. So we raise high yield from underweight to neutral in our strategy. Concerning emerging market debt and also investment grade bonds, we keep the recommendation of neutral.